Many hope President Biden's plans to release 180 million barrels of oil from U.S. reserves will reduce rising fuel prices ahead of the busy summer season. But how likely is it that will happen? 13 on your side's Charlie Tinker has a breakdown from the experts in tonight's Verify.
President Joe Biden called this week's decision the largest ever release from the U.S. Strategic Petroleum Reserve. But the internet's abuzz with questions over whether the added supply would be enough to drive down costs and when drivers could expect to see that difference. To verify, we went to the U.S. Energy Information Administration, or EIA, the U.S. Department of Energy, Western Michigan finance expert Dr. Matthew Ross, and Patrick DeHaan, the head petroleum analyst over at GasBuddy.
I thought the first release was kind of a disappointment.
Referencing a recent case study, November's release of 50 million barrels.
Because it came at a time that Russia had basically just started the war in Ukraine. I was surprised it wasn't bigger.
The EIA maintains weekly average price records dating back to at least 1990. Tracking the chart from early December 2021, when the White House suggested that release would hit the market, prices fall 12 cents from late November's national average of $3.39 to an average of $3.27 a month later. Experts estimate the U.S. uses around 20 million barrels a day, meaning the amount then tapped equated to only about half a week's supply, a drop in the proverbial barrel.
That's a large supply of oil coming in that's going to do a lot to sort of make up the imbalance.
The withdrawal announced this week, however, would amount to 1/4 to 1/3 of the entire estimated U.S. stockpile per the Department of Energy, which puts it at just over 600 million units, substantially more than in previous releases, which could translate to substantially more relief.
It certainly could be a big move.
And as far as the timing of that relief,
we're seeing price response from it right away, just on news of that announcement.
There will likely be a net positive for motorists filling up. That could push prices down by as much as 10, maybe even as much as 35 cents a gallon.
So we can verify, yes, the additional supply could push fuel prices lower. But experts say external pressures like the war in Ukraine, decisions by OPEC, and domestic production could also weigh on any downward movement. With your Verify, I'm Charlie Tinker.